Hey harvesters, and welcome to the channel. My name is Matt. In today's video, I'm going to be going over the trades I executed for June 10th. I'm going to be talking about the cash secured puts, and that's really it. I only ran 3 cash secured puts today. I'll talk about the different strike prices and the considerations I made for running those specific options. Then we're going to take a step back. We're going to look at the last 41 trading days and see how the progress has gone over that time period. And then lastly, we're going to head back to Robinhood. Then I'm going to explain what I plan on doing for tomorrow and then kind of talk through some different scenarios. So let's get going. For anybody that is a new viewer to the channel, welcome. This Robinhood and this channel is strictly dedicated for income generation. We do have a secondary effect of we're trying to capture some of the upside and some of the appreciation when we are running these options. But ideally, we are all about income generation here, racking in the premium or harvesting that premium, right? And I don't want to wait 30 years to be 59 and a half years old before I'm able to take out my money. I want to be able to use that money today. If I have bills I need to pay, mortgages, truck payment, grocery bills, cell phone bills, I can pull the premiums I'm making from this options trading. Or what I really plan on doing is if I stay disciplined for the next 3 to 5 years and stay consistent, I might be able to replace my W-2 income. And at that point, now I have the freedom to do what I want with my life without having to show up 5 days a week to a 9-to-5 job. How amazing does that sound? If you're interested in seeing how this plays out in the long term, don't hesitate to subscribe to the channel. I'm going to be making these videos every single day, Monday through Friday. But without further ado, let's talk about the Robinhood account. The first thing I like to talk about on the channel is this account value, and it's currently at $162,774.04. I do this for one main reason. It's the reason for transparency. A lot of people out there just make videos talking about theoreticals. I'm actually doing it. I'm showing you my account with full transparency. You're going to see the account go up. And when the markets are bad, you're going to also see the account go down. So now that we have that out of the way, let's head over to the Excel spreadsheets and talk about the trades that I executed. All right, guys, let's talk about what happened for June 10th. I ran 3 cash secured puts that netted me $236. Let me explain circumstances that led to me just running cash secured puts. The previous day on Monday, I had a monster day of making about $1,162 of realized gain. 436 was premium, and then the remaining 726 was just appreciation from when I bought in at to the strike price that I chose. And then going to June 10th, I just had $159, almost $160,000 of pure cash. So what did I do? I just ran cash secured puts. So what did I do? I chose 2 different strike prices, the 531 strike price and the 530. So theoretically, the way that a cash secured put works, as investors are going to pay you an upfront premium, and then the only thing you need to bring as an investor is collateral. That collateral could be cash or margin. And today I had the cash, so I just used my own cash. So for that cash secured put, I need to bring about $53,100. And for these other 2 strike prices, I just needed to bring about $53,000 per contract. So in total, I needed about $159,100 for me to run this option strategy for these 3 cash secured puts. And the 531 strike price, since it was closer to at the money, netted me a higher premium. So it was about $96. And the strike price at the 530 was about $2 away, and that netted me about $70 of premium at the time. All of these options expired worthless. So at the end of the trading day, well, up front, I made this $236 of premium. And then at the end of the trading day, I got my cash back. So now that it's accruing interest while I'm waiting for the next trading day to open, and then I can run some more trades. There really isn't anything more to it. So let's head over to the other side of the spreadsheet and talk about the last 41 trading days. This is the favorite part to my videos, is talking about the progress of the trades I'm making. So it's easy to tell, like, oh, green sell means good, red sell means bad. We're keeping it nice and simple. When I started this covered call and cash secured put options trading, I started back on April 11th. That's when the market was pretty much at its lowest point. So I did find a favorable upside in the last 2 trading months. The account started at this $86,312.66. Currently, it's valued at $162,778.52. I threw a little bit of my own money in there. Some of it was gains. So now we're at this 162,000 mark. Hopefully tomorrow we can hit that 163. Let's go. But for June 10th, like we mentioned, I made $236 of raw premium. There was no appreciation. That was just cash that came into my account immediately. And then I can use it to buy more shares of SPY, or just put it as cash to cure some interest. I think Robinhood pays 4.5% interest. So for the last 41 trading days, I made $13,759.63. And if we look at that as a percentage, it's about 11.25%. So not too shabby. I will say this, that I put a $60,000 transfer of money into my account about like 20 days ago. So it's just feeling the effects of that money. And as you guys can see from May 21st on, my premium have been significantly higher than most of my days in April, or before that point with a smaller account number. But moving forward, the trade win percentage, I'm winning about 97.56% of my trading days. I had 40 winning days, 1 losing day, and like I said, 41 total days. I'm averaging about $335.60 of premium a day. And if we look at the amount of weekly premium I'm making, it's about $1,528.85. If you look at that as a monthly number, it's about $4,586.54. And let's talk about what I have here in the yellow. The yellow here is strictly just estimates based off of my trading performance. And what I did here is I took the average weekly premium number and I multiplied it by 52, because we have 52 weeks in a year. And we came up with $79,500.08. This would be a great number to achieve over a 12-month period. However, like I said, I did have a favorable upside over the last 2 months with like buying the dip on the low tariff point and then riding it up. But if you look at the last 2 weeks of trading when the market stabilized, I've actually had my highest premiums when it was at that stable point. So just throwing that data point out there. And if I can make about 54% off of my current account over the next 5-year periods, I definitely can get to a Robinhood account value that is very favorable enough for me to then replace my W-2 income with options trading. That'd take me literally 15 minutes in the morning. It takes me longer to make these YouTube videos than to execute the trades where I'm actually making money. But when I first started this options trading back on April 11th, I came up with a very conservative goal of making about $29,740 of premium. And thus far, we are only about $15,980 away. So we are well on our way to blow that goal out of the water. And I came up with more accurate estimates based off performance. So right now, if you look at this white cell here, we have this 29. There's about 29 weeks remaining in 2025. And so what I did is I took the average weekly premium and multiplied it by the remaining weeks we have. So the rest of 2025, I should be making about $44,336.59. If we throw in the money we've already made of that $13,759 in 2025, without trading the first 3 months in the year, I'd make about $58,096. If I go more towards the conservative side and just try to make at least a minimum $8,000 a week, which I think is very attainable with my recent track record. So 29 weeks remaining, $29,000. And then I added the money we've already made in 2025. By the end of 2025, I should have made a premium of about $42,759.63. So that's quite exciting. That is a significant amount of money to just be trading for, 15 minutes in the morning every single day. I think the return on investment is very nice. All right, let's head over to the weekly side. Looking at the weekly tracker, we have completed 9 full weeks of trading. And over the last 5 trading weeks, we have hit that 4-digit club of making $1,000 or more. I want to make sure I maintain that for the remainder of 2025. I don't necessarily care if it's low thousands or well into the $1,000 mark, but a weekly goal of $1,000 is very attainable with my current account size without going too crazy and just maxing out margin. I don't want to do that. I want to play this relatively safe. I want to use all of the cash I have, and then with some of the buying power I have available or the collateral, I want to just run cash secured puts and choose strike prices that aren't actually going to get assigned, so I can rack in a little bit more money, in addition to also selling covered calls on the cash and the stocks that I own. That's kind of what the plan is and the strategy is for my account. And then for this current week, we're at $1,398. of premium and appreciation gain. So we are doing fantastic after 2 trading days. It will be interesting to see if we can maybe blow out last week's almost $2,000 mark. It'd be nice to hit that, but we will see. For the monthly tracker, I'm just going to highlight the key points here. For April, I didn't trade the full month, and I had a major mistake on April 22nd where I didn't do a good job of understanding rolling options and then not choosing strike prices that are at my dollar cost average. So then I lost money, and I would have that scarlet letter for as long as I continue trading, and I will see this red sell. And remember, be smarter. And with that loss, I probably would have had somewhere around close to $4,000 of trading that April, but then sometimes we have to learn our lessons in blood. My lesson in blood was this day, and it was a very sour moment where you don't want to replicate this ever again. For the month of May, we had a monster $8,073.10 month, and then for June, we are currently at $3,397 and well on our way. I think we have about 2 full weeks, like 2 weeks and 3 full trading days to go. So we will see how the rest of June will play out. And lastly, for the yearly tracker, we've already mentioned this number. We're at $13,759.63. Another call out I want to highlight is my margin costs. In April, I was still heavily invested into high income ETFs, and then I just sold out a lot of them, and I was on a little bit of margin. Now, the only time I ever have margin is more for my cash secured puts, and the only time I actually realize the margin is if the cash secured put gets assigned, and then once a covered call gets assigned, I then try to then sell the premium or the covered call at the money so I can offload it, make a ton of premium, and get rid of the margin. And in the month of May, I only was charged $69.57 of margin. So I got assigned a few times and then sold it the next day or the day after. And for the month of June, I think I'm already at $40 of interest accrued. But we will see what Robinhood has in store for us when I have to pay up. Cool. Now that we have gone over the last 41 trading days, let's head over to Robinhood and talk about what I plan on doing for tomorrow and some of the strike prices that look appealing. All right, guys, now that we are back at Robinhood, let's go over the account and then talk about what I plan on doing for tomorrow. As you guys can see for my account, I literally only have 15 shares of SPY. I do plan on doing a $1,700 buy because I haven't bought shares recently from all the premium I'm making. And the way I operate for my account is whenever I make premium, I then go ahead and buy SPY shares the next day. All of the appreciation gain I make from trading, I don't actually reinvest it back into SPY. I just leave it as cash because as the stock market goes up, I want to be able to have enough buying power, enough cash to then buy the 100 shares of an underlying. So that's kind of my thought process there. So premiums, I will buy shares of SPY, and then for all the appreciation gain, I'm just leaving as cash. Let's talk about my buying power for a minute here. Robinhood is crazy enough to let me borrow about $565,000 of buying power, even though my account is only at $162,000. And I looked this up because I think, Dave, you mentioned this as one of your questions. The best answer I came up with is for a margin account, usually you're supposed to do it's like the ratio of like 2x what your cash is. But then I don't know if I'm considered a pattern day trader. I don't buy and sell the same investment every single day. I just run one set of options on it and then I just leave it alone. But my buying power is about 3.5 times my cash. So maybe because I have a bigger cash account that I have more buying power. I don't know. It's hard to say, but that's what I came up with from ChatGPT. But ideally, I just want to give you guys a strategy of the holistic picture. For my individual cash, right now I have cash, but ideally I would like to own 100 shares of an underlying so I can run covered call contracts. That can either be contracts of SPY or covered calls of QQQ. Lately, I have been doing QQQ because the amount of investment I have to put into the amount of premium seems to be a little bit higher than SPY. So I've just been riding that high for a little bit. So ideally, I plan on buying about $153,000 worth of shares and then running covered calls against that. The only time I ever use margin is I use it as collateral. I don't actually want to own hundreds of shares on margin. I just want to use my buying power margin so that I can squeeze out more premium without actually having cash secured puts assigned. So if I were to use all of my cash, I can still run about $160,000 of collateral and margin options, if that makes sense. I could run $160,000 of margin collateral. So then that could net me about 2, maybe 3 contracts of cash secured puts on the QQQ. And so ideally, I would choose strike prices that I don't think are actually going to get assigned, so I can make in premium at the end of the trading day. This margin usage gets cleaned up, and I'm never actually charged interest on the margin because I didn't buy anything. This was more so a placeholder. So for me to squeeze out extra income, that's what I'm doing. I'm taking a little bit of margin and reserving the right to buy shares, but I don't actually buy them. And then at the end of the trading day, if nothing is assigned, then the margin's cleared up. I never actually had to pay interest on the margin because I didn't buy anything. So I rinse and repeat, and that's how I'm squeezing out extra money every single day, day in and day out. And over a year period, over a couple of year period, that's going to add up over time. Some people, they can be very risk adverse and don't do that strategy, but this is the worst case scenario that happens. Okay, I buy 100 or 200 extra shares on margin, and there's a black swan event. Then I'm just going to wait out the black swan event until the markets recover just like everybody else. Yeah, I might have a little bit of margin that I have to pay per month, but as long as I'm making enough premium to pay it off, it doesn't really matter. And also, I still have a day job, so I wouldn't have a problem paying the little bit of margin cost for running these options. That's kind of my 2 cents. However, I will say this with a caveat. Say 5 years from now, and then I'm living off of this income, I probably would be very risk adverse when it comes to running these options. But because I have that safety blanket of I do have a W-2 to support myself if some sort of thing happens like a black swan event, I will try not to over leverage myself, but at the same time, I'm not going to miss the potential opportunity of making a little bit more money and maybe buying some shares at a cheaper price. So just throwing that out there. But let's head over to QQQ and talk about what I plan on doing for tomorrow. It's going to be relatively similar to what I did today on June 10th, where I'm probably just going to run 3 cash secured puts. So you guys know my work. I'm like to explain how a cash secured put works. So we do sell, put. Don't ever do buy call. Whenever people like lose a ton of money in the stock market, they're doing buy calls or buy puts. Don't ever buy them because you're giving up your upfront money, and every time that the option you buy doesn't go your way, you're losing money to time decay. So for me, I rather just own the shares and then have time decay work in your favor, as in someone pays you the upfront premium, and over time, if it's not getting close to that strike price or at the money, then that premium is going to go down, but you've already locked in that money up front, so it doesn't matter. And same thing with the cash secured puts. So ideally, on this channel, I will never do buy call unless there is a crazy deal discount in the market. Otherwise, I'm just doing sell calls or sell puts. But for cash secure puts, sell put, let's get after it. The expiration date is going to be June 11th. So I like to run cash secure puts or covered calls daily. And the reason I like to do that is if the market fluctuates in its price, I'm able to adjust it on a daily basis instead of having to choose a strike price a week in advance and hoping whatever you choose doesn't get assigned or your strategy happens to go your way. Of course, you can roll options and things like that, but I just like running things daily. Things expire at the end of the day, and then you can readjust at nighttime, come up with a new plan, and then hit it in the morning. All right. QQQ trading at 532.85. Let's take a look at what these premiums are looking like. First thing straight off the bat, my mentality is just let's take a look at what $5 below at the money looks like. So that's going to be the 527. The 527, let's see. $57 of premium for 3 cash secured puts might not be too bad. So that's what, $171. So that's not bad for, cash secured put. Let's see what the delta is. Delta is about a 0.15. So if anyone that is not familiar with delta, that's a 15% chance of this option's executing. And I think that's kind of low. So I think I would be willing to risk an assignment and going a little bit more aggressive. So maybe see what this 529. I like this $90 number. It's a 0.22. Yeah, I like usually the numbers that I like the most is a delta somewhere between 0.2 and 0.3. And if I can find that, that'd be fantastic. So maybe for tomorrow, I probably would run, see what this 530 looks like. Yeah, I'd probably choose something at this 530 and then maybe 2 at this 91. Yeah, so just from just 2 cash secured puts, I'd make $204 and then plus another 90. So I'd make almost close to $300 if the market stays exactly the same when the market opens. Usually it doesn't. It's going to fluctuate. The pre-market's going to change, and the pre-market's going to change how some of these premiums are going to look like. That's pretty much what I plan on doing for tomorrow. 3 cash secured puts, 2 different strike prices, 530 and 529. That's the video. All right, guys, I hope you learned something new in this video or gave you a different perspective about what you plan on doing for tomorrow. Let's stay locked in, let's stay disciplined, and let's stay harvesting. Matt out, and I'll see you at the next video.